I think now the recording is well. I can record now. Right. So this section is very important, as I said. So we will see a question, then you can understand the chapter. So we'll practice 2 3 questions. This is 2021 O level. Question number 6, A and B together we'll do. 2021 O level question number 6, 1 and 2. Right. Name the elements of the prime cost. Now see, first question they have asked elements of the prime cost. So here I said the cost can be classified based on the cost components or cost elements. Cost elements. So here the answer is, so you see prime cost having three, right? Prime cost having three: direct material, direct labor, and other direct cost. Number one, the answer is direct material, then direct labor, and the other direct cost. Direct or prime, both you can refer. Here I have given it direct cost or the prime cost. Then they're asking you to prepare required. See the second question. Nimal started a business for the manufacturing canvas fabric bags on 1st Jan 2022 and the purchase machinery of 120,000 for it. Now they have used purchase a machinery. So the machinery is become a fixed asset. So machinery they have purchased machinery is what? A fixed asset. See here, machinery is what? A fixed asset. Machinery is a fixed asset, very important. It is not a material purchase, it's a fixed asset. Machinery, fixed assets. With the usage, the machinery value will be coming down. With the usage, the machinery value will be coming down. For that coming down value, we do a provision that is called what? Depreciation. Depreciation means Shaya Beamer. Now you can see here they have calculated the depreciation of the machinery. See, they have done a calculation for the depreciation of the machinery, that is 3,000. Following are the production expense for the month of Jan. Building rent. So building rent, what is it? Building rent is indirect other cost. Then wages for the bag uh, uh, sewers, wages for the bag sewers, that is become what? Direct labor. Because these are the people that sew in the bags. See, very important. Wages for the bag sewers. Then wages for the watcher. Watcher wages is what? Indirect. Indirect labor. Then purchase of the canvas fabric, that is direct material. Direct material. Then bag designing expenses, other direct cost. Other direct cost. Then electricity, indirect other cost. Indirect other cost. Machine repair in expense, it's what? Indirect other cost. Indirect other cost. right? Then the depreciation of the machinery, again, what is it? Indirect other cost. So they're asking at the end of the month, know any stocks of the canvas fabric and the cost of cost of canvas bag is 1,200. At the end of the month, know any stock of canvas fabric and cost of canvas bag is 1,200. They're asking you to prepare for the manufacturing canvas bag in the month of Jan 2000 prime cost production overhead cost. If you prepare here manufacturing cost statement, then it's easy to calculate all these answers. I will show you the format. So you need to write the name of the business, Nimal's business, manufacturing cost statement for the year ended, no, not the year, month ended 31st Jan 2000, 2022. So this is the format. Just look at the format. Again, a statement. Right. You start with the raw material. Raw material. You need to remember the format, student. But opening stock, then raw material purchases, then minus the closing raw material, closing stock. Right? Then you get the answer here. Cost of material consumed. Then you add here direct labor. Direct labor, then other direct cost. Other direct cost. Then you get the total here, prime cost. So that means you add it raw material, direct labor, other direct cost. All together you call it prime cost. Then you add here production overhead. Production overhead. Right, now you need to write it. Building rent, it's a production overhead here, building rent. How much the building rent value? 20,000. Here, building rent, 20,000. Then what else? Wages for the bank servers, that is direct labor. Here, wages. How much the value? 60,000. Then wages for the watcher, it's production overhead. Watcher, it is how much? 25,000. Right. Then purchase of the canvas fabric, it's 200,000. It's the purchases here, 200,000. Bag design expense, it's a other direct cost. Bag, bag design cost, other direct cost. How much? 30,000. Electricity, 8,000. It's here. Electricity 30,000. Machine repair 14,000. It's again here. Machine repair expense 14,000. Then depreciation of machinery again here 3,000. We have taken all the information. Then we can take the total here. 290,000 is the prime cost. Once you add the production overhead here, you get the total here 92. Once you add 92,000 to the 292,000, you get here the total production cost. Easy. Easy. Total production cost. Prime cost done. Production overhead cost is how much? 92,000. Then this is the total production cost. Total production cost. Question done. If need, we can calculate the cost per bag. Cost per bag. Cost per bag equal total production cost. Total production cost divided by number of bag produced. Number of bag produced. Here, total production cost is 382,000. That has to be divided by how many bags they have done. Just see here, they are saying at the end of the month, no any stocks of Canva fabric and cost of the Canva bag is 1,200. So they have given the cost of Canva bag is 1,200. So, but they have not given us the number of units. Here, if you divide this by 1,200, then number of bags can be calculated. Number of bags equal 382,000 divided by 1,200. You can say 318. This much the examiner will not be tested from yours or your section, your areas, but basically you need to know how to prepare the manufacturing cost statement and how to classify this cost, right? How to classify this cost definition examples are very important. So we are doing high level of a summary class. Therefore, all the things that I am discussing is very, very important for you to pass the exam. Right, so if you go to section A here, you can see some MCQ they have tested from the this section. See here, following are expenses to produce 1,000 kilograms of cakes in a cake manufacturing business during the month ended 31st March 2022. They're asking two questions. The prime cost for the production of the cakes for the month ended 31st March 2020. Then, what is the selling price of the 1 kilogram of the cake if retaining a 10% profit margin? We'll do this question. Hmm? Come on. Come on. Yeah, come on. How do you calculate the prime cost? Prime cost equal what are the things we'll take? Following are the expenses to produce 1,000 kilograms of the cake in a cake manufacturing business during the month ended 31st March 2022. So wheat flour is the prime cost, yes. Then you have to add it. Wheat flour cost, egg, yes, eggs is a prime cost, direct material. Other material 20,000. Other material. We don't know whether it's a direct material or indirect material. We'll take it to indirect material. Then wages, they ask in the prime cost. Then we'll write it, no? With prime cost 31, prime cost. What are the things we'll take? Wheat, wheat flour 100,000. Then egg, eggs 10,000. Then wages for the cake maker, wages, it's a part of the prime cost. Cake maker, very important. This is the person who is directly engaged in the production. Person who is directly engaged in the production is the cake maker. Right, then rent of the business will not come here. Then electricity bill of the machinery will not come here. Then the total of this will be the prime cost, that is 155,000. Answer is 2. Then 32, what is the selling price of the 1 kilogram if the cake is retaining a 10% profit margin? So we have to calculate the total production cost. We have to calculate the total production cost. We have done the prime cost. Here we have taken the prime cost. We need to add the production overhead. Add production overhead. Production overhead. Production overhead. What are the production overheads you are having here? Rent of the business, rent. So the information is asking for a month. Better you take the rent for a month. Monthly 10,000. Then electricity bill 15,000. Then other materials 20,000. Actually, here I'm confused with the other material 20,000. Is it direct or indirect? X other material. I will take it here. Better no under the prime cost material. Other material. They are silent on it. Other material. Fine, we'll take it. Other material 20,000. Once you add the production overhead, here this is the total production cost. Total production cost. This is the total production cost. Total production cost. Then they are keeping how much the profit margin? They see here. If the selling price of the kilogram of the cake is retaining a 10% profit margin. So this is 200,000 for how many kilos? 1000 kilos. Then the per cake per kilo price cost per 1 kg cost equal 200,000 divided by 1000, right? So the 1000 kilos, no? Then the answer is 200,000 divided by 1000 is 200. 200. Then add the profit. Profit is how much? 10%. Add the profit. So here plus profit. Profit 10%. 200 of the 10% is 200 of the 10% is 20. Then the selling price is 220. Selling price is selling price is 220. It's done. Right? Anything to clarify, Amina? Litum? Is there anything to clarify? Do you have anything to clarify from here? Is it hard? Amina?
No, sir. No, no, sir.
Okay, very good. So we'll do one more question. This is 2021. We'll see the latest paper. So you need to remember these formats. Remember, students. Here, 2024, question number 6. 24 O level, question number 6. Right. The first one you can't understand because we haven't done chapter yet. So just leave it. State two occasions where the errors can occur in the accounting process. Just leave it. Right. So we will do the errors story later on. So see the number two. The cost information relating to printing of 1000 calendars for the year for the year 2025 in Xavier production business is given below. So they have covered here 1 year accounting period. This is very important. So the period that cover is 1 year. Then Xavier production business is given below. Papers and ink. They have given papers and ink. So this is become part of the direct material. The monthly salary of the printing worker. There are two printing workers. Then that is direct labor. So this is given with the monthly. So you have to multiply that by 12 to get the annual. This is monthly. Monthly salary. Then expense for the designing of the calendar, again other direct cost. Printing machines, machine annual depreciation. Indirect cost, that is production overhead. Monthly electricity bill for the printing machine, again they have given for the monthly. They are confuse you by giving monthly and annually. This is monthly. Monthly salary of the cleaner of the printing section, again monthly. This is again monthly. Right? Glue, thread, and the pins. Monthly salary of the printing section voucher. Again, that is production overhead. monthly, right? So here they are given here year. So therefore you must multiply everything by 12, right? The cost information relating to a printing of 1,000 calendars for a year. So they are saying here information is relevant for a year. Therefore you must multiply by 12. This is important, huh? Right. Calculate the selling price of the calendar with a profit margin 10% on cost. So we will do the manufacturing cost statement. I just copy the format. Xavier production business. Manufacturing cost statement for the year ended, not month, year ended 31st, we'll say 31st December 2025. So this is for the year 2025, huh? Right. Right, we'll take it. Paper and ink, that is 100 purchases. Here, paper and ink is direct material. Then the monthly salary of the printing worker, there are two printing workers here, wages, direct labor. Wages, here you must take monthly salary is how much? 40,000 into 2 into 12. For year you must take it. Equal 40,000 into 2 into 12. 960,000. Then expense for the design of the calendar, other direct cost, designing cost, 5,000. Printing machine annual depreciation here, production overhead. Printing machine depreciation. Printing machine depreciation. Annual depreciation 24,000. We do this for a year. Take it carefully. This we do for the year. Therefore, you must do, if anything given monthly, you must multiply by 12 or else take it directly. Monthly electricity bill 8,000. Then the electricity bill 8,000 into 12. Here 8,000 into 12. Then salary of the cleaning. Here salary again given for a month. You have to multiply by 12. $180,000. Then glue, thread, and pins. Again, production overhead will take other direct material. Glue pins, 1,000, smaller value. Then what else? Monthly salary of the printing section watcher salary. What's your salary? Again, given monthly, you have to multiply by 12. Right, taken. Right, so here the prime cost comes to this value, then production overhead comes to this value, then the total production cost is 1,606, 1,606,000. Then they are keeping a profit margin 10% on cost. You have to add profit here, plus profit margin, plus 10% into 10%. Then the total value is this much. Total value is this much. How many units they have done? 1,000 calendars. Then the price per unit equal 1,600 no 1,000 1,766,600 divided by 1,000. This has to be divided by 1,000. They have done 1,000 calendars. Then the answer is this divided by 1,000. It's 1,760.60. This is the answer. Calculate the selling price of a calendar with a 10% profit margin. Right? See, even though it's having 2 marks, there are a lot of things to be done. Just 2 marks, but there are a lot of things to be done. Right? It take time. It take time. So we'll see one more question. The same paper, question number 31, 32, and 33. Right, just read everyone. Amina, Litum, just read it. Answer question number 32, 33 using the following information. Cost information related to 500 pair of shoes. Production of a shoe manufacturing business are given below. So how many units they are doing? 500 units. Purchase of the leather, it is direct material. Purchase of thread, glue, needle, and other materials, 2,000. Shoe sewing charges, that is direct labor. Purchase of the shoe sole, it's again direct material. Depreciation of the shoe sewing machine, it's production overhead. Purchasing new shoe sewing machine, it's not an expense. It's purchase of a fixed asset, right? It's a machine. Sewing machine mean it's a fixed asset, not a cost. Purchase of a fixed asset. Purchase of a fixed asset. Then the shoe designing fee. They're asking you to calculate direct material cost of the pair of shoes. They're asking you to calculate direct material cost of pair of shoes. Purchase of leather, part of the direct material. Then purchase of thread, glue, needle, and other material will take it under the production overhead, right? Then shoe sewing charges, it's a direct material. Purchase of the shoe sole is a direct material. So depreciation of the shoe sewing machine, it's production overhead. Then the purchase of a shoe sewing machine will not come. Shoe designing fee is part of the other direct cost. Purchase of leather 75,000. Then shoe sole 10,000 is 85,000. So this is for how many pairs? We have done 500 pairs. Cost per